Good afternoon, and thanks for joining us today. I'm Bruce Tatter, CEO at Red Cloud Securities. Today's webinar features Seabridge Gold, the premier gold and copper exploration development story that I believe exists in the world today. All of its projects are domiciled in politically secure regions of the world, particularly Canada and the US. And Seabridge ranks number one in gold reserves per share and number one in gold resources per share among all North American listed gold companies. We're extremely privileged to have Rudi Fonk Co-Founder, Chairman, and CEO here to provide a general update and outlook for the company. In addition, we also have Jim Anthony, Seabridge Co-Founder and well-known macroeconomic commentator with us as well. He's going to provide an outlook on the gold market and on the macroeconomic outlook and an update to investors today on some of the key events that are unfolding in real time. Hopefully, Jim will shed some wisdom on how things might unfold as we get through the end of 2023 and into 2024. Should be a very interesting year ahead of us. As always, we will begin with Jim's comments prior to discussing Seabridge with Rudi. After the formal presentation, we'll be taking questions live. Please send us your questions via chat, and we'll get to many of them as we can. You can type your questions into the chat box at any time during the webinar. To start, we're going to handle some disclosures, and then we're going to hop right into it. For Seabridge Gold, there may be some forward-looking statements made on this call. I would direct listeners to the cautionary note on page 2 of the corporate presentation on their website. For Red Cloud, I would highlight that this webinar is for information purposes only and should not be considered a solicitation to purchase, sell, buy, or sell securities. And we note that this call does not take into account individual particular circumstances of every individual or investor. Participants should rely on their own investigations and seek their own professional advice before investment. Please see our most recent disclosures on the Red Cloud Securities website. So now, let's turn it over to Jim to begin.
Oh, just get there we go. So a little bit of a gold market update. Currently, the narrative is all about the Fed. I'm sure most of you are familiar. The Fed is successfully taking down inflation. Rate hikes are done. Rate cuts are expected by mid-2024. No recession, probably a soft landing, maybe no landing at all. Treasury yields have peaked. So it's a very benign environment as far as gold is concerned, and therefore what this means for gold is that basically it's stalled 3 to 6% below its all-time high, forming a triple top, which is not supposed to happen in technical terms, and we don't think it will prove out in the end. Big tech equities remain the focus for speculation, not gold stocks. Gold stocks are near an all-time low vis-a-vis the gold price, as you can see in the chart on the right. Junior gold stocks and development companies are struggling in terms of share price, which is bringing in mergers and acquisitions as the gold price is doing that much better than gold stocks themselves. Now, is that really what it's about? I think the market is missing the obvious. And what we're going to see instead is that the key to the gold market for the next little while is in the treasury market. Gold is signaling a major change in the system. After many decades, the gold price is no longer correlating inversely with real yields. Why? We think it's because gold is sniffing out a sovereign debt crisis, and U.S. treasuries are no longer at a risk premium over emerging market debt, which is very surprising, as you can see in the bottom right graph. And volatility in the treasury market is now higher than it is in the gold market, which is an interesting reason not to be buying treasuries. And Bloomberg, as a result, is reporting that liquidity, in fact, is very poor in the treasury market, getting poorer. And The problem, once again, is the U.S. deficit. It's accelerating again. The deficit is now at 8% of GDP, immense, and exceeding 2.3 trillion annually and growing in Treasury spending as Treasury spending explodes. The Fed rate hikes are driving interest expense, which has nearly doubled in 2 years to more than $1 trillion annually and growing fast. You can see the chart at the bottom right. And only the Fed quantitative easing enabled the COVID spending spikes that you can see in the chart on the left. But once those were done and spending fell back a bit, you can now see that the underlying trend continues to be up. So, what are US 2024 funding requirements? Well, the real expert here, we think, is a man by the name of Luke Groman, who has a publication called Forest for the Trees. He quotes, or he writes as follows: assume private markets must absorb at least 350 billion to 430 billion net effective new, that is additional US Treasury issuance per month in 2024. That is a lot of money. And that isn't the end of it, as you will see in a moment. Dealers are overstuffed with treasuries. The big banks are trying to sell, and in fact, they are reducing their holdings. And hedge funds, believe it or not, have taken over the treasury market making function with the basis trade, the so-called basis trade, where they sell the cash and buy futures using leverage of, if you can believe it, 100 to 500 times. That's right out of the Financial Times, who did a survey of this. What could possibly go wrong? Can the private market fund the Treasury without the Fed? We don't think so. And to the right, let's look at the full picture, not just the new issuance. We have 2.3 trillion in a deficit, assuming no growth and no recession. We have 1 to 2 trillion in net foreign US Treasury selling, and that's assuming that the US dollar and the oil price remain stable. If they go up, so will the selling. It assumes 1.2 trillion in Fed quantitative tightening. That's what they do. They've already done it for 1 year. They'll do it for another. And on top of that, 5 trillion in US Treasury refinancings next year. The stuff that rolls over has to be taken back and reissued. So that's 9.5 trillion to 10.5 trillion needed from private sources. This is an immense amount of money. We don't think the private market is good for that. And in case you're counting on foreign holdings, the news there is all bad, and it could get worse. We think it might. The foreign share of U.S. T-bills has fallen from 2015 to now from 50% to 23%. You can see that in the green line in the upper chart. The foreign share of U.S. notes and bonds, again, the green line on the bottom chart, has fallen from 63% in 2009 to 33% now. So there will not be help from abroad. The Treasury response so far has been interesting, a little bit innovative. They've done something they've never done before. They've announced that they are moving more of their funding to T-bills. And the market actually was quite receptive to that. But it should be noted that this is the typical emerging market strategy when they have sovereign debt problems. And even after making that announcement, the next coupon auction of 24 billion of 30-year paper on November 9 nearly failed, with a record spike in yields after issuance and dealers having to take down 24.7% of the issuance, more than twice the normal. Now, to be fair, they had a better 20-year auction last week, but the fact here is that the volatility is enormous. and not at all suitable for the world's largest and supposedly deepest market. Now, here's a little bit of fun. How did the Treasury cover its $2 trillion deficit in 2023? Well, they got $1.5 trillion of that from reverse repo cash, of which there was $2.5 trillion sitting at the Fed at the start of the year. So the remainder of the pandemic money printing binge of 2021. In effect, the Treasury is still being funded by past quantitative easing. And there's only $1 trillion left, which is likely gone by January. So I wonder what they're going to do then. And we do think a recession is coming. Now, you can use a lot of different measures. There's about 18 straight months of down in the leading economic indicators. But we kind of like the negative bank credit growth, which we're now into, as the single best indicator that recession is near. And if that happens, the deficit is likely to go to 12%. That would be the typical markup, 12% of GDP, or about $3.5 trillion. So all considered, we believe QE is coming, and we believe it's coming soon. And if so, the dollar will fall and gold will fly. So over to Rudi, and he'll tell you a little bit about our company.
Thanks, Jim. Yeah, like I said, we'll get Rudi to go into his presentation before we take questions. Keep them coming.
Thanks, Jim, and always fun to listen to you. You and I have enjoyed working together for now 30 years, I believe. And
That's right.
You've truly been a mentor to me over the years, and I appreciate all the support you've given me over that time. So Jim and I formed Seabridge back in October of 1999. Gold was trading at about $260 an ounce. We were contrarians back then. We're contrarians today. Back then, we thought the price of gold would go substantially higher, and we still think it has a long way to go. When we formed the company, our goal was to build what we thought would be the best leverage play to a rising gold price in a public company vehicle. One of the guiding principles we followed from the beginning was to try and avoid political risk. In a prior life with Jim, we actually built a number of mines in Central America that were eventually expropriated by the government, learning how real political risk can be. So when we formed Seabridge, we said, we're not going to make that mistake again, and we concentrate only on North American assets. We have 2 advanced stage assets, KSM in British Columbia, Courageous Lake in the Northwest Territories, and 3 earlier stage assets that we're now finally getting started on in terms of early stage exploration. Iskut in British Columbia, 3 Aces in the Yukon, and Snowstorm in Nevada. The other guiding principle we followed, in addition to trying to avoid political risk, was the idea of building value, optionality to gold by growing ounces in the ground faster than shares outstanding. The work we do at Seabridge, either through exploration or acquisitions, is geared towards growing ounces per share. As you can see on this chart here, we've been successful on that. From 1999 to 2002, we were in acquisition mode, buying projects, then started to drill them in 2005 and growing the ounce count. And you can see over time here, at the end of 2022, we had far more ounces of the ground than shares outstanding. In fact, if you look at us on a relative basis, either gold reserves per common share or gold resources per common share, we have over 2 ounces of gold in the ground per common share. Let me repeat that, over 2 ounces of gold per common share. 170 million ounces of known gold resources in the ground, 84 million shares outstanding. That gives us 5 to 10 times more gold ownership per common share than the leading gold mining companies. And how has this played out in the market? Well, if you look at our track record and share price performance over our history relative to the gold price and other gold equities, as you can see here, we've delivered on the concept of optionality and leverage. During the span, the gold price is up about 500%. Our share price is up over 5,000%. Now, it's true that when sentiment is weak in the gold space, like it is right now in gold equities, we underperform. However, if the price of gold is going higher, as Jim and I clearly think it is, owning Seabridge shares, in my estimation, will provide that optionality and leverage going forward. Our view is if the gold price is going higher and substantially higher as we believe, our share price should do what they've done in the past, and that's outperform gold and other gold equities. We talk a lot about gold. That was the basis for the company. We got pretty lucky. One of the assets we acquired, KSM in British Columbia, not only yielded a lot of gold, but along the way came a lot of copper. If you look at us today and ignore our gold, silver, and molybdenum resources and reserves, and just look at our in situ copper, in terms of copper reserves per share or copper resources per share, we actually have more copper than the leading copper companies. And why is this important? As bullish as we are on gold, I think we have to be bullish on copper as well. The growing demand for copper that's going to come about as a result of green energy initiatives will be quite substantial. New mines are not getting built. Therefore, when you look at the supply and demand fundamentals, you have to like copper going forward, as well as our views on gold. Turning now to KSM, where I'll spend most of the time remaining. This is a project that we've been working on diligently since 2006. We acquired this project in the year 2000 from Placer Dome. Placer Dome had spent $25 million at KSM, delineating two deposits, the Kerr deposit and the Sulphurets deposits. They sold us this asset in June of 2000 for $200,000. Just a clear indication how big companies misallocate capital, selling when valuations are low and buying when valuations are high. We don't make the rules, we just enjoy them. Bruce, here we go, okay. So my button wasn't working there. So KSM is located in an area called the Golden Triangle. It wasn't known as the Golden Triangle when we bought it. It is now becoming the fast go-to spot for the big gold companies and copper companies. In the immediate vicinity to KSM, we have Newmont, we have Newcrest, that's now part of Newmont. We have Teck. We have BHP that's come in here recently with an early stage exploration project, as has Freeport-McMoRan. What separates our project from others is, number one, size. It's the largest undeveloped gold and copper project in the world. Number two, it's permitted. We went through the environmental assessment process with the government and now have permits that allowed us to start early site construction, which are now underway. Third, it has the support of the indigenous groups around the project. In fact, a lot of work we're doing now is direct award contracts to the Niska Nation and the Tahltan Nation, and we have impact benefit agreements in place with both of those nations. And last but not least is the capital efficiency I'll share with you shortly. When we bought this project, local infrastructure was non-existent. Fast forward to today, we now have a major highway just to the east of KSM, Highway 37. Along that highway, the government of Canada and British Columbia has spent over $700 million extending the power grid, bringing cheap hydropower to the district. We've now secured, with contractual agreements with BC Hydro, 245 megawatts of power from this line, which at current tariffs will allow us to buy power off the grid for about 5 cents per kilowatt hour. And we are now constructing the switching station with BC Hydro that will allow us to take power off the line and have power available to the site within the next couple of years. And then last but not least, just to the south of us, in the town of Stewart, we have one old port facility that's been there a long time that was upgraded when Newcrest came in buying Red Chris, and a brand new port facility that sits in the same location, just a little bit to the south, that's waiting for an anchor tenant. Having ports here will allow us to bring supplies in on an annual basis and ship concentrate out to any smelter on the Pacific Rim. I can't tell you how unique it is to have in a project of this scale that's undeveloped, highways, power, and ports right there that we don't need to build. John, I'm going to ask you to advance it. My advancing is not working here. Okay, so KSM, we call it a project. In fact, it's actually a district. We own 100% of 5 deposits. The Kerr and the Sulphurets deposit were known when we purchased it in the year 2000. We expanded both of those through additional drilling. We found Mitchell in 2006, Ironcap in 2010, and we purchased East Mitchell in 2020 from our next door neighbor Pretium for $100 million in cash. Collectively, these 5 deposits yield 11 billion tons of economic resources, with Mitchell, East Mitchell, and Sulphurets confined as open pits, and Ironcap and Kerr confined as block cave shapes. These 5 deposits give us 150 million ounces of gold and over 50 billion pounds of copper. Mitchell, East Mitchell, and Sulphurets are more gold-dominated project, meaning that the majority of the revenues from these 3 deposits would be as gold with a copper byproduct, whereas Ironcap and Kerr are more copper-dominated project, where the majority of the revenue would come from copper. This project provides tremendous flexibility in terms of sequencing the mine plans. If you want to go after copper, focus on Ironcap and Kerr. If you want to go after gold, focus on Mitchell, East Mitchell, and Sulphurets. Now, as we went through the environmental assessment process on KSM, our permits now allow us to mine and store 2.3 billion tons of material in our tailings capacity. Next slide, please. After we acquired the East Mitchell deposit from Pretium in 2020, we immediately embarked at looking how that deposit could improve the overall design of the mine and economics. In August of 2022, we filed a new technical report that included an updated pre-feasibility study for KSM, focusing on the gold-centric 3 deposits that can be mined as open pits. This new mine plan gives us a 33-year mine life, averaging over 1 million ounces of gold production a year and 178 million pounds of copper at an all-in cost of production of about $600 an ounce. That all-in cost of production estimate of $600 an ounce includes the upfront capital of $6.4 billion, the sustaining capital over the 33-year mine life, the closure costs, the reclamation costs, and the operating costs net of copper and silver byproduct credits. I might point out that the industry today is proud of an all-in sustaining cost of $1,200 to $1,300 an ounce, whereas this project comes in at less than half of that. Next slide. Obviously, inflation is a factor in the mining industry. It always has been. We're seeing a lot of cost overruns at some of the big projects. Teck just announced the large cost overrun on the QB2 project. Fortunately, at KSM could withstand a lot higher capital costs and operating costs and still generate very, very strong economic returns. That's a result of the low unit costs, the margins we have, and the longevity of the project. Next slide, please. In addition to the 3 open pits under the PFS mine plan, the technical report we filed also showed what can also be done by mining Kerr and Ironcap as block caves. That tack-on mine plan added another 39 years of mine life, but repositioning the production from those 2 deposits as a copper-dominated project, with an all-in cost of production here of $1.44 per pound of copper, including the capital, including the sustaining capital, the closure cost, the reclamation cost, and the operating costs. That on its own would be a very, very strong copper mine compared to other projects around the world. And as a mining engineer, what I love about KSM is the flexibility. If a copper company wants to mine copper, you have it in those 2 deposits. If a gold company wants to mine gold, you have it in the 3 open pit deposits. A lot of optionality and flexibility on how you might develop the mine plans. Next slide, please. One other position we're taking now is the idea of making sure that our permits are good for the life of the project. As I mentioned, we achieved environmental approvals in 2014. Those original approvals and associated permits were good for 10 years, meaning they were going to expire in July of 2024. In 2020, as a result of COVID, we went to the government with the support of our First Nation partners to secure an extension to that expiration date, and we're now good until July of 2026. Under no circumstances do we want to let these approvals expire. Fortunately for us, there's a mechanism in British Columbia known as substantially started, that if we can achieve that designation, our permits are then good for the life of the project. So in 2021, we decided as a company to go out and secure the capital necessary to get to substantially started designation. We did an initial deal with Sprott Royalties and Ontario Teachers Pension Plan in February of 2022 that brought in US $225 million in cash in the form of a secured note that will convert into a royalty on silver at commercial production. And then we did a follow-up tranche with Sprott just earlier this year at the end of June, bringing in another $150 million. So combined, these two fundings brought in about $500 million Canadian that we are now spending on substantially started. By the end of this year, we will have $450 million Canadian invested specifically on substantially started activities. And we expect now to go to the government for this designation in January, well before the expiry date of July of 2026. Now I'll share with you some photos in terms of some of the work that we've accomplished over the past 2 years. Next slide. So substantially started focuses on permanent infrastructure to be built for the project. So our focus has been on starting first at camps. You can see here Camp 11, which is right off of Highway 37, that now gives us 210 beds available. All of the rooms at Camp 11 have in-suite bathrooms and showers and a big screen TV. To attract good people, you need good accommodations, and we've definitely built that at KSM. Next slide. Water is a huge factor in getting environmental approvals. Even for a camp, you need to put proper sediment control measures in place. And as you can see here, we've done that now at Camp 11. In fact, we also added water treatment plants you can actually see in those little white trailers. We have not had to use them yet because the sediment control within the series of ponds have worked so far. But if we need to turn those machines on, we can. Next slide. As I mentioned, our ability to take power off the line is a big part of the success at KSM. We've now secured 245 megawatts of power with BC Hydro from the Northwest Transmission Line that's fully erected and energized. You can see here now the switching station that's under construction with BC Hydro. In February of 2022, we contracted with the BC Hydro $92 million of expenditures, which by the end of December, we will have paid all that will allow them to come in and build their switching station for us. By building a switching station, we'll be able to take power off the line and then transport that power up the roads we're now building to the mill, the tailings facility, and eventually through the tunnel down to the mine site. Next slide. Roads. There were no roads existing at KSM. We've now built the first 20 kilometers of our main access road, the Treaty Creek Access Road, that will connect Highway 37 to the mill. This road will be used to actually transport supplies into the mine, as well as take a concentrate out to the Port of Stewart. And on the right is the beginning of our second major access road coming down from the old SK Creek Mine Road, quite near, close to Skeena's SK Creek project. That road now is under construction. We finished about the first 4 kilometers of that road. Next slide. We continue to pioneer the road in front of us. This is just the pioneering that goes north of the Treaty Creek Access Road. We have a Y-intersect. This is the Y to the right that actually will give us access to where the mill and the tailings facility will be located. Next slide. In addition to water being a big part of environmental approvals, fish are also a big component of getting your environmental assessment certificates. When you have a project that's going to impact fish habitat, you need to build offsetting fish habitat. At KSM, we have 4 different fish habitat sites that we've agreed to build over the course of the project. We've now completed the construction of the first fish habitat. You can see just to the upper left there, the Belle Irving River. That's where the fish will be able to come in from off the river and then hang out in the ponds we've built here, do whatever fish do, and then migrate back into the river at the appropriate time. We've actually had to put a fish gate up here now because we're not supposed to have fish in here for the next 2 years, but they already want to come into this facility. So this will be fun to watch over the next few years. I'm planning on getting a license, BC fishing license, and come hang out at some of these ponds and catch a bunch of fish. Next slide, please. And then finally, bridges. The last component of substantially started is building bridges. This is the bridge that goes over from Highway 37 over the Belle Irving River, past Camp 11, and up to the mill site and the tailings facility. This is the bridge that will be used to transport concentrate out to the Port of Stewart and bring supplies in. As I mentioned, we are now very confident that the work we've done will guarantee our substantially started designation. We are now planning to file for that designation in January. We expect to have the support of the Indigenous populations supporting this application. And then last but not least, having this designation approved well before the expiration of our permits in July of 2026. And as I mentioned, we will have over $450 million into substantially started up activities when we file. One other great thing about substantially started has been our ability to interact with First Nations. As I mentioned, we have impact benefit agreements in place with both the Niska Nation and the Tahltan Nation. Under those impact benefit agreements, they have certain guarantees on contracts in certain areas. There will be direct award contracts to them, provided they were competitive. As we started substantially started activities, though, if we awarded a contract to the Tahltan, the Niska were not happy. If we awarded a contract to the Niska, the Tahltan were not happy. So at our urging, we asked them to consider forming a strategic joint venture to allow them to work together on all these projects. They did that. They have now formed the Treaty Creek Limited Partnership, and all the work we're now giving out to First Nations, at least the Tahltan and the Niska, is now going through that joint venture. So everybody's happy. And by the way, of the $450 million we've spent, almost $300 million of that has been going to First Nations companies directly or to companies that have established joint ventures with the First Nations around the vicinity. Next slide. I'm now quickly going to go through the balance of the projects in the next 5 minutes, and then we can come back and have some Q&A. So Courageous Lake is our second large asset. We purchased this asset from Total and Newmont in early 2002. When we bought this project, there was 5 million ounces of known resources. Today, we increased that to 11 plus million ounces through exploration activities. Next slide, Jim. We did a pre-feas on Courageous Lake in 2012 that showed a fairly large, producing over 400,000 ounces of gold a year, but not a very economic project. In fact, if you looked at the project, nobody would have built it because of the financial returns. And by 2012, we were well on our way at KSM. One of the reasons why Courageous Lake looked so bad in 2012 was at a time when the Canadian dollar was essentially on par with the US dollar, which is not good for Canadian assets. We are now in the process of bringing this project back to the forefront. We're going to be showing a much more robust project. Obviously, a weaker Canadian dollar and a higher gold price will help. But in addition to that, we're also looking at a smaller starter project here. Instead of 400,000 ounces a year, we're going to be showcasing a project that will produce about 200,000 ounces a year at much better economics than previously shown. That updated study should be completed in early next year. And this is a project that right now we're contemplating either the next step would be to either joint venture this or sell this outright. And we'll make that determination after we complete that study. Next slide. I think where we've had most of our success over the years is our ability to identify early stage projects with known gold mineralization and then advancing those projects through exploration and building ounces while keeping our share count low. That's what we did from 1999 to 2002 at KSM and Courageous Lake. In 2015, valuations got very, very decimated again. It was another opportunity for us to go out and find new projects. And starting in 2015, we've now bought 3 new projects. The first of which was the Iskut property located in northern British Columbia. Next slide. In fact, it's right in close proximity to KSM. We believe this could be another KSM. We just finished a 23-hole drill program here, all core drilling, that's focused on extending our existing Bronson Slope deposit, as well as finding new gold copper porphyries. We expect to announce the results of this drill program over the next month or so. Next slide. 3 Aces is a project we acquired at the height of COVID, a project that at one time generated a market cap to the previous owner of over $200 million. We bought this project for $3 million at COVID. Next slide, please. We like large land packages. Again, this is a district play over 300 square kilometers with a lot of known gold showings up and down the belt. After we acquired this, it took us about 2 years to get our exploration permit from the regulators with the support of the First Nations. We did receive that in late 2022, and we just finished our first large drill program at 3 Aces, drilling 27 holes, which were more designed to confirm our geologic model and to show that there was continuity from the different zones previously identified over the strike length. The drill results from that program should be announced over the next month or so as well. Next slide. Third acquisition was Snowstorm in Nevada, a large land package in Nevada. A lot of our team has a lot of experience in Nevada. In fact, one of our directors, Eliseo Gonzalez-Urian, was head of global exploration at Placer Dome when they acquired the Getchell project from Getchell Gold back in the mid-1990s. What El saw there was only 1 million ounces of known resources, but a lot of upside. And I think that upside has now been proven out with over 20 million ounces found since that time. Next slide. Snowstorm is just north of that Getchell discovery, the Getchell project, which is now part of a joint venture with Newmont along with Twin Creeks. We see a lot of similarities in terms of structures and age of rocks. We continue to try and focus on vectoring into the high-grade zones there. Have not found it yet, but we're going to keep on looking. Next slide. So why invest in Seabridge? I should point out that I'm a bit jaded here. I have 95% of my family's net worth in Seabridge common shares. So of course, I believe the price is going higher. And why do I believe that? Well, I am bullish on gold here. I'm not always bullish on gold. I am today. And I think gold, as a result of Jim's presentation and other factors, will go substantially higher over the next few years. And if that is the case, owning shares of Seabridge should do what they've done in the past, and that show significant outperformance relative to the gold price and other gold equities as a result of the over 2 ounces of gold per common share. We are now in a world that needs new gold projects and copper projects. The elephant in the room is that the gold industry is running out of reserves. Why did Newmont go after Newcrest? For their ounces in the ground and some long life projects. You're also starting to see the big copper companies focusing on new opportunities as well. We own 100% of the world's largest undeveloped gold copper project in the world in a safe jurisdiction that has tremendous capital efficiency and is permitted. Exploration, we did this first round of the company. We now have 3 new projects to advance that to a second round. And we believe that any one of the 3 projects we're now exploring could be a company maker. The addition of East Mitchell into this KSM mine plan not only significantly improved the KSM's economics, but it also made it a more executable project for those companies that have never block caved before. That was always a challenge in previous discussions with potential partners. Our previous mine plans all included block cave deposits. We've now removed that from the first 30 some odd years. So you don't need to worry about block caving. As a result of that, as a result of what the market needs now, as a result of the work we've done, as a result of the substantially started activities, it's now pretty much all behind us. We believe now is the perfect time to get a joint venture done. I've talked about a joint venture for many years. We've had a number of proposals over the years. We got very close a few years back on a specific deal with a major mining company. It's different today. We have a much better project. We have substantially started, underway, and almost done, and we've improved the project dramatically. As a result, we've started a formal joint venture process led by RBC Capital Markets to go out and get us a joint venture partner. We had 6 companies actively involved in discussions over the course of this year, as well as due diligence. 5 of those companies visited the project, and we're now advancing discussions with a number of those 5 companies to get to a point where we can get a deal done. I am very, very confident that we'll be able to achieve a joint venture within the next 3 to 6 months with a major mining company. Our goal in a joint venture is to hang on to a meaningful interest in the project while at the same time trying to minimize our capital exposure. And then last but not least is our ability to keep the share count low. We've made a promise to our shareholders that we're only going to dilute their shares if we can actually find ways of adding value from that dilution. We've done it in the past through exploration activities and acquisitions, and we expect to continue to do that. I'm often asked when I do start off presentations with new potential investors, when did we do our rollback? Well, never. We started this company, Jim and I, with 17 million shares outstanding as a shell with a 10-cent share price, and $200,000 in the bank. Today, yes, we have 84 million shares outstanding, but we have 170 million ounces of gold. Next slide, which is the last slide. So just another point to make on Seabridge is the strong insider ownership. Insiders own over 25% of the stock, including Albert Friedberg, who's been our biggest shareholder since 2001 and continues to be so. And then a number of better known gold names that actually are bullish on gold like we are. We are dual listed, trade on both the New York Stock Exchange and the Toronto Stock Exchange. Although we're a Canadian company, most of our volume is in the US on the New York Stock Exchange. And then we're also part of a number of indices. Because we're very cheap with our commissions, we don't have a lot of the big bank coverage in Canada. We have a lot more of the entrepreneurial names following us, like Cantor Fitzgerald, Red Cloud, B. Riley, and Gold Stock Analyst. But just recently, RBC Capital Markets came in recommending the stock at a starting point of a US $25 target price. We believe that as we move into a joint venture, there will have to be more names that will have to follow us and take a view on the company. So, Bruce, with that, I think we can go to Q&A.
Thanks, Rudi. So, listen, I've been looking through the different questions, and at this point, Rudi's got more than Jim. So as long as you don't mind, Jim, we're going to have Rudi start the questions.
That's good.
And Rudi, we had a few that were similar around this topic. So I think we should probably bring it up first because I think it's on people's minds. So I think this is one of the questions you should be thinking about. The recent press releases from Seabridge and Tudor indicate that the legal issues are far from settled. How much does this hurdle affect both the distraction at Seabridge itself, and also is there any potential impacts on dealing with potential joint venture partners?
Yeah. Well, from our perspective, it's behind us now, and let's look at the facts here. Several months ago, Tudor filed an application with the BC regulators asking to have certain authorizations we have in place associated with our Mitchell Treaty Tunnel canceled. We filed a response to that application, obviously opposing their request. The regulators have now come back and turned Tudor down. They've denied their request to cancel our approvals. I should point out that some of the approvals we have here actually allow us to start construction on the tunnels. We're now permitted to start building all the tunnel portals, and two of those portals actually exist on Tudor ground, and we have the ability to build the first 100 meters or so of the tunnel path to the first crosscut. The regulators also confirmed that any future authorizations must consider existing rights held by third parties. What's important to note here right now is that Tudor Gold only holds exploration rights. They do not hold any mining rights. The authorizations we have and the authorizations we're going to be looking to get down the road do not interfere with their rights to explore. In fact, in our plan of operation under our existing permits, we've dealt with the issues to make sure that they will have access to any of the materials that are mined through the tunnel that sits on their ground. For them to actually get mining permits, they have to complete at least a PFS and then get environmental assessment approvals. Based on where they are today, that's going to take a long time. I'm not going to say how many years, but judging by how long it took us, it's a long road in front of them. If they get a mining permit, we agree that the tunnels could interfere with their operations. However, we've also told Tudor on many occasions that if that is the case, we'd be happy to find a way to flex and move that portion of the tunnel so it doesn't interfere. So from our perspective, we've dealt with these issues. The government has decided in our favor. I know Tudor would like their shareholders to think differently, but we were quite pleased with the response. We acknowledge the rights as third parties, and we will deal with those rights going forward in terms of what their existing rights are. And again, their existing rights today are for exploration, not for anything associated with building a mine. You know, right now, Tudor has not yet completed a PEA. They keep kicking that down the road. When they get that PEA, we can have a first look at what the economic viability of their project looks like, and then they can go from there. So that's, I think that's probably all I need to say on the Tudor issue, Bruce. I think I covered it.
That's a good answer. Thank you for that, Rudi. Next question is for Jim. Jim, I've had questions for you in previous calls way back when on your view of crypto. This one's a little different. It's what are your thoughts? I mean, I think it's particularly relevant too, because as you know, the World Gold Council is suggesting pushing crypto, gold-backed crypto coins. And so the question here is, what are your thoughts on the potential demand for physically backed gold crypto coins, and could these be helpful in attracting young buyers into gold? Because us old people aren't cool enough for the young people.
Yeah, definitely. Any way that makes it easier to deal in gold, and to deal especially in smaller quantities, is a good idea, is a good thing. And I think you can expect to see that kind of innovation in the marketplace as we go forward. What you're not going to get is Bitcoin or any other crypto turning up in central bank reserves. So gold is always going to have the edge in vis-a-vis any other medium of exchange or preservation of value. And the method of using crypto in order to facilitate dealing in gold is still dealing in gold. It is another way of doing it, but nothing other than that. So, there is and always will be a bit of a competition between gold and crypto. Let's call it pure crypto. And I think that's appropriate. The world can handle a competition of that sort. But when you look at what the major banks have done, and particularly what the central banks have done, the vote has been firmly in favor of gold and the accumulation of gold. And in the last 2 years, we've had record purchases of central bank gold and the disposition of dollars to pay for it. So there is a move going on to get away from the dollar, and it's to get to gold.
Yeah, I actually think it's a great evolution of the blockchain or crypto technology.
Sure.
Don't you think, Jim?
Yes.
You're actually backing it by something now, which is a wonderful development.
Yes.
You'll have
it's great.
people like Warren Buffett and Charlie Munger saying that it's actually got something of some real value backing what it is.
That's right. No, it hopefully works. It just needs the right backing to make it a go.
Perfect. Next question is for Rudi. For the KSM potential partner, will you do a joint venture with the best offer received, or will you walk away from doing a deal if certain minimum criteria are not met by a potential partner? I could probably answer this one.
A zinger.
Yeah, that's a zinger. So look, we want to get a partner. It's time to get a partner, and we're going to get a partner. Obviously, we're going to do the best deal we can, but we also need to focus on how that project will sit within our partner's portfolio. It would be nice to find a partner that this would become a prime focus for them, putting a lot of light on the project, versus maybe a partner where you're competing with a lot of other projects for capital. So there's a lot of factors that go into, it's not just terms, it's also who is the best partner based on what they bring to the table. But we're fortunate that for the first time, we're not just dealing with one company at a time. We have a real competition going here, which is what you need to do to drive the best value. Anything I should add to that, Jim?
No, I think that was a pretty good answer. You got to be careful.
Next one is for you, Jim, and it's a question from me. So, a lot of the setup that you talked about in your presentation had a lot to do with the fact that just from a supply and demand standpoint of treasury issuances, it's going to get to be a much more difficult world for the U.S. Treasury Department.
Yes.
So, it sounds to me like you're suggesting yield curve management by the Federal Reserve at some point is going to come reality. I'm just wondering for those on the call, because I think it's a fairly technical concept. Can you please just explain to them a little bit about what yield curve management is? Because that's sort of what you're implying, and what its potential influence would be on gold.
Yep. Okay. Yeah. Yield curve control is the more common phrasing of it. We saw that immediately after the Second World War in the United States, exercised by the Federal Reserve, and they decided that the 10-year note would never have a yield of more than 2.5%. So what they did was they simply bought 10-year treasuries every time the yield went above that, or in other words, the bonds fell. And they kept the price pretty much exactly within a very tight frame of 2.5%. And they did that through until I think it was 1954. Now, that's what that does is it prints a lot of money, because what are they using to buy the treasuries when they need to buy them? Well, they use printed money. And so that's what they did. They ignited inflation, but slowly and in a very controlled way. They did a pretty good job. And what they did, and this was the key to the effort, they brought their debt to GDP, which then after the war was 115%, for obvious reasons. You need to buy a lot of destroyers and airplanes and all the rest of it. They brought it down to 60%, through this process of buying the 10-year and keeping the yield within the 2.5% range. Now, what that also accomplished was a real interest rate of negative 14% at one point in 1950. And that is obviously inflationary, and it undercuts the dollar. Now, at the time, it didn't undercut the dollar very much, because Europe had just been bombed out, and in fact, France had a negative real interest rate of 70%. So they were in good company, let's put it, or they were the clean shirt among the dirty hamper. But from currently where we are now, if we see yield curve control, we're going to see a much weaker dollar. We're going to see negative real returns again, real yields, and that is going to drop the dollar, but also reduce the debt to GDP ratio, which really needs doing. And it also brings in the potential for an industrial policy of reindustrializing the United States, because wage rates in real terms are going to be lower. This is not going to be pleasant for people, obviously. This will be tough times, but there will be enough benefits that they will likely want to proceed. And the chief one of those is that they're going to avoid a whole lot of defaults that would occur if they do not take care of this issue and yields go much higher than they are already.
Thanks, Jim. Next question is for Rudi. I'm going to paraphrase it just a little bit. Basically, the question's asking if a number of very large major mining companies are moving into the Golden Triangle and doing their own exploration and development work, is this going to discourage them from doing a JV with KSM?
I don't think so. I mean, you look at what discovery costs are for these big companies, $15, $20, $30 an ounce. Today, we're trading at $5 an ounce in the ground, or $6 an ounce in the ground. We're cheaper than them going out and finding their own. Also, they recognize even from early stage construction to first mine, that's probably 20 to 25 years. So it's a long timeline for them to get to a new project that produces metal, whereas our project is ready to go, construction underway. So I think because of how far we've advanced our project relative to early stage construction or exploration projects, we would be the better fit.
And I think generally, what's the timeline? I mean, just to reinforce your point, what's the timeline between discovery and construction and eventually production for a general project?
I think it's 2 decades now. For a big project like KSM, it's 2 decades. So you can point to a lot of projects around the world that actually are taking longer than 2 decades to get to first production. Big projects are hard. We understand that. That's why we're not trying to do this ourselves. We acknowledged very early on that this project was well beyond our capabilities, and we need a major mining company that has the technical, financial, and social wherewithal to build and operate KSM. And our challenge has been there's very few companies that check those boxes. But it does take a long, long time. And I think the biggest thing that I've seen in my career is how much longer the environmental process is now. I remember early on in my career being able to get a mine permitted in less than a year. Let's look at KSM. We started the environmental assessment process in 2008. We got our environmental approvals in 2016. That was 8 years almost from beginning to getting, 2014, so 6 years to go through the EA process. It's more challenging now in British Columbia and elsewhere in Canada and around the world, for fact, because of the provisions of UNDRIP, where now, United Nations declared the rights of Indigenous people, that they're actually involved more closely now in the environmental permitting process for big projects. So I think the timeline that we saw back then is much longer now, which actually adds more timeline to first production. And then construction of a project the scale of KSM. We have a 5 to 6 year build here. So it takes a long time, Bruce. And that's why when I look at the market today in terms of copper and the supply and demand fundamentals, why you have to be bullish on copper here. New mines are not getting built. The grades at mines that are being mined today is going down, so it's less production. We're starting to see deficits in the copper market already before we see these huge expected growths that are going to come in from green energy initiatives like electric-powered vehicles, wind turbines, and solar panels. Those all three use a lot more copper than is being produced today.
Absolutely. So look, we're running close to a full hour in here. I'm going to take one more question each for both of you guys, and then we'll wrap it up. So for last one for you, Jim, do you think the issues with the banking system highlighted earlier in the year with instability in several small banks will have any residual influence on the gold price and its move in the future?
Yes. The question is what happens to yields, and what the government put in place, the Federal Reserve put in place, was a program whereby the banks, after the failure of Silicon Valley Bank, could pledge their assets, that is particularly treasuries and agency debt, could be pledged at the bank, at the central bank, the Fed, in exchange for full face value cash, which was a good way of adding liquidity, strengthening the balance sheet of the banks that had these assets, which were marked down, didn't want to sell them and take a 30% loss, and needed the cash. So they could get that from the Fed. Very nice of the Fed to do that. By the way, another form of QE, nicely disguised. And they put out more than $1 trillion under this program. Two little problems, and all these things are coming to a head along with the things that I presented earlier today. The first problem is that they have to pay interest. So while they've strengthened their balance sheet, they are weakening their income statement. This is not a pleasant thing. Earnings are going down in the banking system, and you can see that in bank shares. The second thing is that it's got a 1-year time frame. What do they do after a year? Well, we're 7 months through it. I guess we're going to find out pretty soon. So all these stopgap measures have not been very successful if you look out past the horizon and take a look at what's going on in the world. There's just not enough money to keep the banks happy when you consider that they have loaned out a lot of money at very low interest rates, and now they are suffering because their low-cost deposits are going to T-bills where they get an awful lot higher return. So the banks are being squeezed. They're going to continue to be squeezed. There will continue to be consolidation and a lot of strife and a lot of uncertainty. We've had a relatively quiet period the last 3 or 4 months. It's not going to last.
Thank you, Jim. And Rudi, I mean, there's several more questions for you. We'll make sure we forward them to you because you can potentially address them directly. But the one I wanted to just mention to you here, because I haven't seen this one in a while, and it might be more appropriate now than it was in the previous calls. After a KSM, post a KSM deal, might there be any form of corporate restructuring to further unlock shareholder value? So I mean, in a post KSM transaction, How do we get all the value realized? We know it's going to be a metamorphosis. How do we plan on handling it?
Well, the value will still be within Seabridge. We'll still own 100% of Courageous Lake, of Iskit, of Three Aces, and Snowstorm, and we'll have whatever residual interest we have at KSM. We've structured the company already that we have a wholly owned subsidiary now, KSM Mining ULC, that will be the joint venture company. So the partner will come in and earn shares in that company. That'll be the joint venture company. So we don't see any reason to do a restructuring, to be honest. I know people always like the idea, let's do spin-outs. Spin-outs, in my view, just create a lot more work for management. Having to run one public company in today's world is challenging enough. And also from a tax efficiency perspective in Canada, as a Canadian company with Canadian assets, spin-outs can yield much higher tax obligations down the road because Revenue Canada will wait a couple of years to determine what the value of that spin-out was and then charge Seabridge taxes on the value of that spin-out that we never really got. So I think the structure of Seabridge remains the same. Wholly owned 4 other projects and the residual interest we have in KSM.
Thanks for that, Rudi. Well, listen, I want to thank both of you once again. I really enjoy doing this periodically. It was a great call once again, and lots of people on the call. I wish we could get to all questions, but we're through the 1 hour mark here. And Jim, Rudi, thank you very much for doing this today.
Yeah, thanks, Bruce. Always good to be with you. And just for those interested, on our website, we're going to post Jim's slide deck on the Case for Gold portion of our website. So if you want to download the slides or look at them, they will be available on our website probably by the end of today. So
we are trying at Red Cloud to get Jim at an event soon near you.
Okay.
And just in closing, anyone that has follow-up questions that didn't get asked today, shoot me an email. My email is Rudi, R-U-D-I, @seabridgegold.com. And in your email question, please put your phone number in. I'd rather call you back than just respond by a follow-up email. So thanks again, everyone, and look forward to our next call.
Yeah,
thanks everyone.
Bruce.
Thank you, guys.